Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look at the gold market. So here we see the significant reaction of the starting kind of the tariff mutual impacts from the China and the United States. From the technical point of view, last time when we have talked about the gold market on Friday, we said, Thursday, we said that gold market actually stands in the point where should either reestablish upward direction, because actually guys, this is the last outpost for the bulls. This is the major 618 support, and really fast reversal here was already not very good sign for a bullish perspective. And actually here my market even has formed a kind of the reverse swing on the intraday charts, but breaking the major fib support already will be much worse for the bullish perspective, and actually it could lead to changing of the daily scenario, daily setup. But as you can see, due to the external factor, that is response and answer of the China to tariffs that have been initiated by the United States, you can see reaction in the gold market. Briefly, we have talked about this possible trade war between the China and the United States in our weekly research, and we have come to conclusion that hardly we could talk right now about real trade war, because the effect of these tariffs that have been initiated too small for the, although it sounds really significant, it's 128 goods from the United States, but in a percent, in the relative shape of this from the overall United States export into China, it stands just for approximately 2%. And overall impact of the $3 billion, it's really very small value. That's why currently we can't talk about really significant impact on the even mutual trade between the United States and China, and even more to global trade. So, but the precedent of this, it's of course not really good. But if even this small amount of tariffs being involved already has triggered this rally on the gold market, what could happen in the future? Because you know that the United States is nearly to announce some more goods, especially in technical sector from the Chinese export, and this kind of assumes some kind of the continuation in this mutual tariffs war between the China and United States. But if even first steps has led to this significant rally, it's probably just in the beginning, and currently it's a very good supportive factor for the gold market. As a result, on the daily chart, we've got bullish grabber have been formed, and this pattern suggests the taking out of this top. Besides, guys, as you understand, this new relationship between the China and United States could lead to adjustment of the Fed policy, because we already see that all this turmoil has made an impact on the United States stock market. As you can see that the major indexes have dropped more than 2% during yesterday's session, and this is definitely the factor that Fed can't ignore. So this is important. Also, if this will continue on the same pace as it stands right now, this definitely will make an impact on employment, not only in China, that's where it depends on the United States import, but also in the United States itself. So that's why definitely this is overall this turmoil around this trading, mutual trading, works as the supportive factor for the gold market. So next target on the daily chart will stand around XOP of this ABCD pattern, and it will be 1370 approximately, slightly above this top. So on the 4-hour time frame chart, you can see the upward action has started right from the 618 support. And as we have the bullish context mostly, we probably should keep an eye on possible retracement to some fib level where we could take the position. Here, guys, we could try to stick with the bread and butter lookalike pattern. Although we don't have the sufficient number of candles, so we have 1, 2, 3, 4, 5, just 6 candles in this thrust up. But at the same time, you can see this is tail closing candles, and this last action was really very strong. So it means that this bread and butter really has not bad chances to work. For that purpose, we need to wait for reaching the major 3-8 support of this upward action. So for that purpose, we could use the hourly chart. Here, probably the downward action will take shape of kind of the ABCD pattern. You can see that become the agreement with the 1334, 1335 area. From the harmonic point of view, we could get the godless triple to buy pattern. So the bread and butter on the 4-hour time frame chart could take the shape of the godless triple to buy, or just you could call it just the ABCD retracement on the hourly chart. This is the setup that we could keep an eye on, because currently, guys, I do not see something else on the gold market. So that's the more obvious opportunity that could be formed here for taking the long position on the gold market. Also, on the current week, as you understand, we'll be watching for non-farm payrolls release on Friday. So this ADP report, so it will be very saturated week for different statistics. So that's our opinion on the gold market, as the turmoil with these tariffs just has started. So this could really lead to some more consequences in the nearest future, and definitely this will be the backwind for the gold market.